Hey friends, welcome back to the channel. My name is Sanjay and today we're going to look at ethical ETFs where the focus is on Australian companies. Now I'm being specific on that because in future videos I'll look at companies that are listed outside of Australia and also other asset classes like fixed income products. But today's video is all about Australian companies and looking at it with an ethical lens. Now, when you look on the Australian Stock Exchange, there are thousands of companies to invest in. And the whole idea is if you can invest through ETFs, where it's like a basket of companies, it simplifies it. So instead of having to capture returns from a whole bunch of individual companies yourself, you can capture the returns of the top 200, the top 300 companies. Now, that being said, there are a lot of ETFs to choose from as well. There are like over 200 ETFs. So the question is, how do you look at ETFs that have an ethical swing to them or an ethical filter on them? So in this video, I'm going to go through 6 ETFs that I've found that have a focus on Australia and they do it in an ethical way. Now the issue is though, and you'll notice this as we go through this video, is it's a bit like the Wild West when it comes to ethical investing. There seems to be varying standards on what's considered acceptable ethically and socially and environmentally speaking. Now, as always, please don't consider this as financial advice. Make sure you do your own research, and especially if you're looking at it from an ethical point of view, take the time out to read documentation like the index methodology and the holdings, because the index methodology tells you how they came up with this list of ethical companies to invest in, and the holdings tells you what actual companies they've decided to invest in. So I think that's going to be very insightful, and you should definitely add that to your research when you're trying to pick which ETF to invest with. Now, like I said before, there are a lot of ETFs to pick from. And it can be quite tricky because when you look at the list of ETFs and you look at how they're categorized, at least by the Australian Stock Exchange, there's no clear category that says this is ethical investing. So the way you actually can find ethical investing is by, well, one way you can do it is by what I did, which is you just look for key terms in the names of the ETFs. So you look for words like ethical, sustainable, environmental, terms like ESG, saving polar bears in Tanzania. All these kind of terms you look for in the documentation or in the labeling of how these ETFs are titled, and you say, okay, that must be an ethical focus. So initially I found about 14 ETFs, but they varied from being investing in Australia, investing overseas, multi-asset class ETFs, so you've got ETFs within ETFs, and then also fixed income ETFs as well. So this ETF is going to be focusing on Australian ETFs, whereas in future videos I'll look at international ETFs where you can invest in countries other than Australia, and we'll do a combined video around the multi-asset class and fixed income ETFs as well, because I think that will also be quite interesting. So the 6 ETFs to pick from are listed here, and it's a nice range of products from BetaShares, Russell, Vanguard, VanEck, State Street, and BlackRock. Now, I've listed them in this table of comparison from left to right based on market capitalization. I've got a few other things there, but I decided to do it based on market capitalization because that's essentially how much money have everyday Australians invested into these ETFs. It's a bit of a proxy for that. So you can see it's quite a range. You've got some that have got $1 billion worth of money invested in them, all the way down to some that have only got $11 million. Now there's a couple of reasons for that. One is naturally the popularity. The other one is just how much time has that ETF been on the market. So naturally, the longer it's been on the market, potentially the longer time it has had to accumulate money from everyday investors. And you can see that ranging there. So you've got something like the BetaShares product, which has $1 billion, but it's been around since 2017. Then you've got someone like the BlackRock iShares product, which literally came out 5 minutes ago, sort of early June 2021 is when the iShares product on the far right came out. Now, in terms of fees, again, you've got a nice variety that ETF providers have given us. You've got some high-end fees, the 0.49 and the 0.45% from Russell and BetaShares, and you've got something very low-end like the iShares product at 0.09. Now, this is sort of typical for BlackRock. They do tend to try and underprice the market. So they might be making a loss on this ETF in its early stages, but I think they're hoping by pricing quite aggressively, they can gain a lot more market share over time. It's probably the idea. I don't know if that's the general idea, but it's not a bad idea. It's a good idea. It's a good idea. It's an idea I would do. Tell you what, that's a good idea. Now, I have said this in the past around fees. I have said I don't like how ethical investing is often higher in terms of fees as other investing is, as well, non-ethical investing or just generic investing, like your VASs, your A200s, all these kind of big broad ETFs, they have fees around 0.1%, 0.07%, and then suddenly if you're investing ethically, you have to pay like 3-4 times more in fees. I don't know why that is. I mean, if ETF providers were supportive of ethical investing, they should try and price them lower. But now you can see, especially look at the Vanguard ethically conscious product, that's 0.16, that's not bad, it's not that far from 0.1%. So it looks like they're all sort of coming to the party except for BetaShares, which is running at 0.49%. I don't know when they're going to change their strategy there. Now the benchmark that they're tracking, this is key. This is what determines what they're actually going to be investing in. So you can see they're all different, which is a good sign, because sometimes when ETFs track the same thing, that can mean, well, you just pick the cheaper one. But here you've got things from NASDAQ, you got FTSE, MSCI, Spider, and S&P have their one, the S&P ASX 200 ESG index, and then MSCI again. So there's a nice broad range. I'm not going to go into detail here. The key thing is, if you want to look at what this defines as being ethical and how they've defined what is ethical, you look for the index methodology documentation for each of these ETFs. Now they'll be very clear and they'll make that very transparent how to find that. But I would say you should read that documentation in detail to understand what you're actually going to be investing in. Don't worry too much about the marketing malarkey that they'll throw up on the ETF websites. That's nice and it's informative, but you should probably also look at the index methodology so you can understand how they've actually determined what's being considered in and what should be excluded out. So the negative screens, the various inclusion criteria, all of that should be all included in there. So important documentation to read. Holdings is literally how many companies at the time of me doing this video did these ETFs hold. So you've got some that have over 200 companies and you've got some that have under 100 companies in there. So that gives you a bit of an idea of how much are they going to be spreading their net to capture companies still within Australia that have an ethical focus. So top holdings, now this is where essentially your money is going. And this is why it's important, especially if you're looking at it from an ethical point of view, you'd be very keen to know, well, if this is ethical, what am I actually investing in? So you've got things like the big four banks. You've got things like mining companies, and they seem to sometimes appear and they seem to sometimes not appear in these different ETF products. And this is what I mean by being a bit like the Wild West. It seems to be very flexible, what's considered ethical, sustainable, ESG, kind of focused, responsible investing. If you want to look at performance, it's a bit challenging because some of these ETFs started a few years ago and others started like earlier this month in June 2021. So you're comparing against varying timeframes, which is going to be challenging. So I guess my initial thought is you're going to have to wait about a year to get at least a year's worth of performance data to know how these ETFs are performing in terms of relatively against each other. You've got a little bit of early data from some of those ETFs that have been around since, 2018. But looking especially at the BlackRock, the Vanguard products, you're going to have to wait a little bit for that. So apologies on that, but that is the reality of our situation. Now I thought for this next section of the video, I thought we'll look at the ETF from different points of view, from different maybe personalities of people that might be out there in terms of how they want to invest, and see how some of these might align with you, and you can sort of use this to inform you on what might be a good product for you. Obviously, you've got to do your own research, but see if these personalities align with you, and then see if that helps you decide which one to pick from. Because it is tricky. You got 6 ETFs to choose from to invest in an ethical way. So let's say the first type of person is very price sensitive. You're very cheap, should we say. You don't want to pay too much in fees. You just want to invest ethically and sleep well at night, but you don't have to pay a lot of money for it. Well, in that case, you're looking at the iShares IESG Core MSCI Australian ESG Leaders product. Very straightforward product, 0.09% against everything else there. It's very well priced. But the holdings that you're going to be investing in, I mean, you got a big four bank, Wesfarmers is in there. How do you feel about that? The whole idea about big four banks being not ethical is, I think, this feeling that a lot of the big four banks were used or have historically given money to coal mining companies. And I think they're working hard to get away from that. But there's a general feel amongst the ethical investing community you should avoid big four banks. So CBA, NAB, Westpac, and ANZ. So because of that, whenever you see an ethical ETF that has the big four banks in there, you have to be like, oh, I'm not sure, but okay. Anyway, now the next type of person might be someone who wants to invest in as many companies as possible. They want to spread their money out across as many companies as possible. I don't know why you would want to do that necessarily, but if that's something you're keen on, then naturally you would go for the one with the most amount of holdings. So that's the Vanguard product. This kind of makes sense for Vanguard. Vanguard products do tend to have a very broad number of companies that they're investing in. If you look at VGS, VAS, they always seem to go with that kind of broad branding. I don't know if that's their own strategy, but over 200 companies who are investing in, that's not bad. That's a pretty good list. However, you can see, again, the big four banks do appear in there. So obviously read into that what you will. Now, if you're someone who wants to generally stay safe in the crowd, you want to follow the broader opinion on ethical investing, and you want to go with a tried and tested product, let's say, then FAIR, the BetaShares product, seems to align to that kind of thinking. It's got $1 billion of everyday Australians' money in there. That's pretty reassuring in terms of what people are trusting in there. And also when you look at the holdings, and I'll go into that in more detail later, but when you look at the holdings, it kind of passes a sniff test that I would call around ethical investing. But you can also notice that it does have a 0.49% fee. It is checking, yes, it is the highest fee there. So you are going to be paying a bit of a premium, but it is also a popular product. Now, the last type of person that I would say is someone who really just does a quick sniff test on this. And this is what's going to connect into another segment of the video I want to do around the holdings, really reviewing the holdings. Because remember, when you're investing ethically, what's actually happening is your money is going into these particular companies, and you need to be conscious of that. You need to be very comfortable with where your money is going into. And so when I say which ETF passes the sniff test, let me show you this. First of all, you've got something like BetaShares, which has this list of companies in there: ResMed, Telstra, Cochlear, Goodman, Sonic. You've got healthcare companies, hearing aid companies, REITs, which are where you're investing in real estate, like commercial real estate, like shopping centers and large office blocks. You got Sonic again. You got CSL, which is your type of vaccines, blood products, even assisting in the COVID fights. Fisher & Paykel Healthcare. So, there's a very reasonable list of companies, and when you sort of do a sniff test of that, you're like, yes, that seems reasonable. Suncorp is in there, which I think is financials with an element of insurance. That's the word I was looking for. And Brambles Food. Why not? Now let me show you the holdings of an ETF that says it's ethically investing, or ESG investing, and I'll let you read into it what you will. So let's look at this list. BHP, Westpac, NAB, Australia, New Zealand banks. It's got the big four banks, it's got a mining company, and Rio Tinto's in there. It's got two mining companies. Now, in case anyone didn't know, BHP is a mining company and Rio Tinto is a mining company. And in terms of the last few years, both companies have not had the best track record when it comes to, should we say, ethical, sustainable, environmental type operations. BHP, a few years ago now, had an event where they had a tailings dam. Tailings is where the stuff that, once it goes through the mine, whatever's left that can't be produced or can't be used in an economic way, is stored. That dam where all that was stored actually collapsed and caused some deaths in South America. It hit a village. So this is an event that you should be conscious of. Rio Tinto, a bit closer to home, there's no two ways of putting it, they blew up a site of significance to the Indigenous community here in Australia. So I am surprised that BHP and Rio Tinto made this ethical investing list. So I think the key thing to say is take the time out to read the index methodology documentation so you actually understand how they decided what companies to put in there. Maybe it's a fully legit idea as to why they decided to include BHP and Rio Tinto for this particular ETF product, but it doesn't pass my sniff test, is what I would say. Is if someone came to me with customer testing, let's say, they said, Sanjay, we want you to look at this list of companies and we're saying we're going to advertise it as being ethical, environmental, all that. How do you feel about it? I'd say, look, it doesn't pass the sniff test because it's got BHP and Rio Tinto and the big four banks in there. What are you doing? This is not an ethical investing strategy. But that sounds very harsh because I guess I have my own views of what I would consider ethical. So make sure you do subscribe so you can be informed when the next video comes out from me, where I'll be looking at internationally focused ETFs where you can invest in countries outside of Australia, which is kind of good because you want to balance your risk and you don't want to be too focused on domestic equities or domestic companies. You want to be able to look at countries outside of Australia that you can invest in as well and get access to those companies. And also I'll do a video in the future where we'll look at multi-asset class ETFs and also ETFs where the focus is on fixed income assets like bonds and things like that. So hope you enjoy it, and I'll see you in the next video. Bye for now.